But we have a very important factor to look at today that usually impacts Indian markets. Crude prices, they are near 2019 highs amid OPEC supply cuts and US sanctions against Iran and Venezuela. David Lennox, analyst at Fat Profits, joins us now. Good morning, David. Thank you very much for joining us. Well, 68 is not a very scary number for Indian, importers, but nevertheless, it's a worry. Do you think it goes on towards 70? What's the range?
Well, look, certainly I think if you have a look at the factors, and good morning as well, if you have a look at the factors that have been impacting on the oil price, a couple of things that have come to mind already. We've seen the February OPEC read for the month, and that shows that production there declined slightly from their January monthly read from 30.8 million down to 30.5 million barrels. So we've seen that some 300,000 barrels coming out of supply. Also, if you have a look at what's been happening in the US, we've seen domestic production there. It's been oscillating between about 12 million and 12.1 million barrels over the last 3 or 4 weekly reads. So we've now seen some form of stability in that read for a couple of weeks. So overall, one probably suspects that something like 100 to 150,000 barrels of supply have probably come out of the market over the course of the last 3 or 4 weeks. And that's really just put somewhat of a stable floor underneath the oil price and given it enough to now push up towards that $70. Look, with the events that we think that may happen over the course of the rest of this year, we do believe that we will see the Brent price push through $70. We've maintained our 74 to 84 end-of-year price range, and we think certainly that the factors that are there are tending to point towards that crude moving higher.
David, hi, good morning. You did mention the US oil production numbers of this around, 12.1 million barrels per day. A lot of people believe that that will put a brake on further price increases, the fact that production has zoomed so much in the recent past. Do you agree?
Look, yeah, over the course of last year, we saw domestic production in the US, let's say it added 2 million barrels, just shy of that number. We can't see that same momentum going through into 2019. So from that perspective, yes, domestic production coming out of the US has been somewhat of a thorn in any rally for the oil price, but we do believe that thorn is probably starting to blunten a little bit as we move, we think, towards full capacity for the domestic production in the US. If that's the case, if they add something like maybe 0.5 to 1 million barrels in 2019, that's the reason why we think the oil price will not move towards perhaps $100, but certainly we can see it in that $74 to $84 range.
Okay, David, just one more hurdle for not just crude, but commodity prices has been repeated data indicating a global slowdown. I mean, it's pretty bad in Europe. When the ECB last announced its numbers, the Chinese trade indicated that economy has not picked up much. Won't that be a bearish factor on crude as well?
Oh, look, Arthur, yes, there's no doubt about it that a slowing in demand would certainly be, I guess, a forefront to slowing global growth. But we've been seeing numbers that would suggest that demand for oil products has remained quite robust, especially firstly in your own country and also in China. Both countries continue to grow. Yes, it is slowing marginally, but there is still significant quantities of oil required to feed into both those countries. And as long as that stays intact, then we believe the oil price from a demand perspective will continue to be more supportive than perhaps we saw through 2018. And of course, we're now in March and we're heading towards April already of 2019, and we're starting to see those demand figures perhaps a little more optimistic than we were seeing them at the start of 2019 in terms of the quantum of oil. And we do think that that's going to hold stead at probably somewhere around 100 million barrels of demand for this year.
Okay, well, David, we leave it at that. Thank you so much for joining us and giving us your quick thoughts. So that's the word coming in from Fat Profits. They maintain a target of $74 to $84 a barrel, and they believe that crude prices could remain at elevated levels because of these two reasons: OPEC supply cuts and the US sanctions. We'll take a short break, but on the other side of the break, we'll drill it down to the micros in our own market. Dheeraj Agarwal of Ambit Capital will join in with some long-term stock ideas.